Whoa. Okay, talk about unexpected. The Fed just threw everyone a curveball with this interest rate cut.
Oh, great.
And not just a tiny one. We're talking a heck LF% drop.
It's definitely a big move. No question about it. It's almost like they're trying to say, everything's fine, nothing to see here. But then they go and make a move this drastic. It's like they're more worried than they're letting on. That 0.5% cut is double what analysts were predicting. Double. So it definitely feels like they're scrambling to catch up.
So instead of a gradual slowdown, they're slamming on the brakes.
Mm-hmm.
But why the sudden change of heart?
Or remember those job reports we saw recently? The ones that looked really positive? Yeah, those seem to have been a little off the mark. The reality is the job market is cooling down a lot faster than anyone expected, and the Fed is finally admitting they didn't see this coming.
So it's kind of like they're driving while only looking in the rearview mirror,
Mm-hmm.
reacting to what's already happened instead of looking ahead.
Exactly. And that's the problem with relying on trailing data, which is what the Fed does. By the time they adjust their strategy, the situation has often already changed.
So this rate cut is like a big jolt to the system, hoping to stimulate the economy before things get really bad.
Yeah, that. The goal is that by lowering interest rates, businesses will be more likely to borrow money, invest more, and hopefully hire more workers. But here's where things get really interesting for the average person, especially if you're paying attention to crypto.
Because when traditional investments like bonds start having lower yields, suddenly crypto starts looking a lot more appealing.
Now you're getting it. Imagine waking up tomorrow and your savings account, which was already barely giving you anything, is now paying you even less. Suddenly, the potential for growth in Bitcoin or Ethereum seems a lot more exciting.
It's like choosing between a slow, predictable ferry ride or jumping on a speedboat that might get you there faster, but with a much wilder ride.
And there are some analysts out there who are saying this rate cut is exactly what the crypto market needed to really take off, especially for those Ethereum ETFs. Remember those? Exchange-traded funds, basically baskets of assets that offer a way to diversify your investments. Well, they've been kind of a letdown so far, but this could change everything. They're saying we're about to see a flood of money pouring out of those low-yield accounts and straight into digital assets.
Okay, interesting. So potentially great news if you're into crypto. But we can't talk about the Fed without addressing the elephant in the room, or should I say the billionaires in the room? Because some very powerful people are saying this rate cut is a huge mistake, a colossal mistake. Actually, they're saying it might even cause a market crash.
And that's what makes this whole situation so captivating. We've got these two completely opposing viewpoints, and both sides have some valid points, which really underscores how important it is to think critically and understand the reasoning behind these predictions.
Absolutely. So let's unpack this opposing perspective. What are these billionaires so worried about?
Their main concern boils down to this. The U.S. government has been spending and printing money at an unprecedented rate. And to be honest, that's a whole other conversation. And cutting interest rates at the same time is like pouring gasoline on an already out of control fire. What they're really afraid of is hyperinflation.
Right, that whole scenario where prices on everything just go through the roof and your money is worth less and less every day.
Exactly. This expert we're talking about believes this rate cut is going to make that problem even worse. And to protect themselves against this potential instability, they're recommending people look into alternative assets. Things like precious metals, gold, silver, platinum. These things have historically held their value during times of economic uncertainty.
So on the one hand, we've got people saying this is fantastic for crypto. And on the other hand, we have the world is ending. It's enough to make anyone's head spin.
Which is exactly why it's important to pause, take a deep breath, and really think about everything we've discussed. We've looked at how this rate cut might boost the economy and potentially benefit sectors like crypto, but we've also highlighted the very real worries about inflation and volatility in the market.
So how do we make sense of all of this? How do we as individuals navigate these conflicting opinions and make smart choices for our own financial well-being?
That's the million-dollar question, isn't it? And as you might imagine, the answer isn't exactly simple.
It's like we're standing at a fork in the road. One path maybe leads to growth and opportunity, but the other one, well, let's just say it could be a bumpy ride.
Yeah, it's a tricky situation for sure. But hey, that's what we're here for, right? To break it all down and give you the information you need to make smart decisions. So let's recap. We've talked about the potential benefits of this interest rate cut, like how it could give the economy a boost, especially in areas like tech and crypto.
Right, that whole idea that when the economy is doing well, everyone benefits.
Exactly.
Yeah.
But we've also got to remember those warning signs about inflation and a shaky market. And these aren't just abstract ideas either. Think about the price of gas or groceries. Those are already high, and if inflation gets out of control, those prices could skyrocket.
So it's not as easy as just going all in on crypto or sticking with those traditional investments.
Exactly. It's all about finding that sweet spot that works for you. And that's where diversification comes in. You know that old saying, don't put all your eggs in one basket?
Sure.
Well, it's not just a saying, it's like the golden rule of investing.
So instead of betting everything on one horse, you're saying we should be spreading our bets across different horses,
Great.
different races, different jockeys. Okay, maybe that analogy got away from me, but you get the point.
I think you nailed it. The main thing is a well-diversified portfolio should have a mix of everything: stocks, bonds, real estate, even crypto, and things like precious metals. And the right mix for you depends on your risk tolerance, what your financial goals are, and how long you plan to invest.
So someone who's saving up for a down payment on a house in the next year is going to have a different strategy than someone who's investing for retirement decades from now.
You got it. And that's where it can be really helpful to talk to a financial advisor, someone who can look at your specific situation and help you come up with a plan that makes sense for you. Think of it like going to the doctor. You wouldn't try to diagnose yourself and prescribe your own medication, would you?
I mean, I've definitely Googled a symptom or two, but I see what you're saying.
Yeah,
It's always better to get advice from an expert, especially when it comes to something as important as our money.
exactly. And the good news is there are more resources than ever to help you out. There are robo-advisors that use algorithms to manage your portfolio, and there are human financial planners who can give you personalized guidance.
So we've covered the potential benefits and drawbacks of this rate, cut the importance of diversification, and why it's a good idea to talk to an expert. But at the end of the day, the decision of what to do with your money is up to, well, you.
You got that right. And we hope this deep dive has given you the knowledge and the confidence to make those decisions. But before we wrap up, I want to leave you with one last thought-provoking question.
Those Ethereum ETFs we were talking about earlier, what if this is what gets them going? You know how some experts are saying Ethereum could become like the internet bond because it could offer those steady returns, but in a decentralized way.
Yeah, that's a really interesting thought. If people start moving their money out of traditional investments and into decentralized finance, like Ethereum, it could totally change how the whole financial system works.
It's like we're about to see a digital gold rush, and this rate cut might be the thing that sets it all off.
It's definitely a possibility. Imagine a world where instead of a bank, your savings account is held by a decentralized network, and you earn interest directly from lending platforms. No middleman taking a cut. It's a future that a lot of people think is going to happen.
Okay, but let's be realistic for a second. This is still all hypothetical. There are a lot of unknowns with crypto and decentralized finance. Yeah. And definitely some risks too.
Absolutely, right? We can't forget that while there's huge potential for rewards with these new technologies, there are also big risks. We're still in the very early stages, and who knows what the future holds.
Exactly. Which is why we always say, do your research, think it through, and don't be afraid to be a little skeptical.
Couldn't agree more. The important thing is to stay curious, keep learning, and keep asking questions. The world of finance is changing so fast, and the people who are willing to adapt and change with it are the ones who are going to come out on top.
So as we wrap up this deep dive, we hope we've given you some things to think about. From the immediate effects of this rate cut to the big picture implications for crypto and the future of finance. And remember, the best investment you can make is in yourself, in your own knowledge and understanding.
Well said. Until next time, everyone, stay informed, stay engaged, and happy investing.